What's up, YouTube? I'm back with another one, and today we got a very important thing to discuss, and I'm going to talk to you guys about dividends, okay? And what a dividend is, and basically terminologies like dividend yields, as well as the dividend payout ratio to help you determine, uh, how if you want to purchase a stock or not, okay? So today we're gonna do something a little different. I'm not gonna be sitting here talking as much to you guys like that. I'm actually gonna go into my Robinhood portfolio immediately. I'm gonna show you guys where you can see the dividend yield at, and you can see where Robinhood pays you out your dividends as well, and just to know exactly to know certain things about whether or not you should invest into this company just based upon the dividend yield. Because some people see a dividend yield of like 16% or something and decide, oh, I want to purchase this company because they're going to pay me a large amount of, not a large amount, but a decent amount of, dividends per quarter or per year or something like that. So we're just going to jump into that, and we're going to discuss everything that deals with dividends. And, I'll be right back. All right. Hey guys, so basically I'm taking you guys over to Yahoo Finance. This is where I read the balance sheets for companies as well. I really like it. They just have so much information and it's just very organized. So I'd advise, if you're into, buying stocks and you want to get into that, I would advise looking into Yahoo Finance just to help make a better decision in the companies that you're purchasing and the stocks that you're buying. It just helps with that because you can see a lot more than just what you can see on Robinhood and other, brokerage. So I do like it for that. So we are looking at this stock that I do own, and we're talking about dividends again, right? What a dividend is basically what a company pays you for owning a stock, right? So I know it sounds a little surprising. So you get paid to own a stock of a specific companies, okay? Not all companies have dividends, and I will take you guys to my Robinhood just to see where you can see the dividend yield for a company, and then as well. I do believe Robinhood doesn't show you how much a company pays in their dividends, but Yahoo Finance will, and Fidelity will as well. So I guess we can take a look at that too later if we have more time. So right now we're on Yahoo Finance, and I'm in the statistic tab, and I'm looking at Geo Group, which is one I do have. So I'm gonna go over to, let me see, I'm gonna go over to the summary, and you can see that it's Geo Group Inc. It's $12.88. But I think it's a little higher now, or maybe lower. I'm not really sure, but I can check on my Robinhood later. So you can see just a bunch of information and about this stock, the volume. You can see the bid and ask. You can see their 52 weeks range from lowest to highest. This was like one of the first stock I actually purchased. I don't know why, I just liked it. This is before I kind of knew exactly how to really look into a stock and see exactly how their company was running. But when I purchased, like after I purchased, I looked into it and I realized like, oh, it's actually not that. It's actually a pretty decent company, and they do give me a nice dividend, I believe, of like 48. You can check right here actually. So it says the dividends is for a year it's $1.92. So we just usually have to divide that by I believe 4, because I think it pays you 4 times in a year. So we could go down. Okay, so I'm just showing you guys this right here, so you can see just basic stuff. A lot of important things is on this tab. We'll get into later. I'm just showing you their dividend for dividend and yield, which is 15.13, which is 15.13%. So which is pretty high. I always look for dividends that are like around 7 and under, because 15.13 it's a pretty high calculation for their dividend yield. So you're doing basically, so how you calculate is that you do basically how much they pay you a year, right? Not quarterly or not every 6 months, because some companies do pay you so most companies pay you like either quarterly, so every couple of months, or they pay you half a year, so they pay you every 6 months their dividends. And and then they have different tabs, like they have annualized, so they're showing you how much the for the entire year they pay you, right? How much you're going to pay for the entire year, but they split it up so they can pay you like every 3 months, right? Boom. Or they can pay you like, who knows, maybe there's some that they pay every month, which I will get into as well. They pay you dividends every single month, but that doesn't mean their dividends is higher as annualized, like the entirety, right? So they can pay you a dividend of 23 cents every month, and a year it would be like maybe like a dollar or something, right? Or and there's another company that pays you like maybe like 70 cents every 3 months, and their annualized is like you know two 250 or something like that, right? So just because they pay you every month and some pay you every 3 months doesn't mean that the one that pays you every month is better. But I do like the monthly myself, just because you're seeing that come through every month, instead of something like every quarter or something like that. So just be careful with that too. So as you can see, yeah, 15.13 is pretty high to me, because it's just like they're giving a lot of their revenue back to people who own the stock, because that's how they pay dividends, just like how much their revenue, and they're just giving to people who own a stock, a share of their company. So let me see. So you basically get paid to own a share of this company and other companies like it. But you always gotta be careful and not solely invest into a company based on dividends, because I'm going to show you guys something to help you determine things like that. So, like I said before about this stock, I didn't really know too much about dividends. So but I've been doing my research, and now basically you can see that their payout ratio. So you always want to have a payout ratio right here, which is under 100, right? In percentage wise, because over 100 means they're using all the revenue they make to pay out their stockholders. So that can be very detrimental to companies, especially during this time right now where the stock market is crashing. People can't go outside. People can't do certain things. Or a company's not making that much money, so they have to dig deep into certain things and not able to make those payments. And if a company stops making the dividend payments, most people will feel like, okay, this company is letting me down, and hop out that company, and their stock price will drop tremendously. Okay, so right now they're using more money than I'd like, to pay me for owning their share. They're using, they have 137% for a payout ratio. That's way over 100%. Usually they say the sweet spot is around 67%. Okay, so we're gonna look at this one. I would say it's doing too much in my opinion. It's a little bad. In that, so there's a likelihood that they can actually stop paying you their dividends because of just like how much they have to dig to pay you their dividends on good years. You know what I'm saying? So right now it's actually a the market isn't doing so well, so they're probably stressing about their dividends a little more likely than before. So yeah, so basically that's how you can check to see if that's a company you want to invest into, just by looking at the payout ratio as well. Just understand, if you want to take that risk and just solely go based upon the company's dividend. Okay, I do like this stock though. It's one of my favorites. And you can see certain things like return on equity. You can see, just the profit margin. You can see just a lot of things. I mean, the earnings per share, you can just see, a lot of stuff. But we'll get into all of that soon. So let me see something real quick. So this is how you can check, like I said, but also, you got to look into the company as a whole too, see how much they're keeping in cash, how much they have in debt too, to make your decision. And just see like if they're growing, if the company's growing every year, and just stuff like that will actually help like you make a better decision too, and just see their revenue that the company intakes as well, will actually help. So as you can see, we can go to, I'm still on Geo Group. Just want to show you guys a little bit of something I'm talking about, right? So you can see their a company's total revenue right here in their income statement, which is about $2 billion. It's in all numbers are in the thousands, so it's not 2 million. It's actually 2 billion. You can just see stuff like that, their net income as well. And then you can go to their balance sheets, which we'll definitely get into, and just see exactly their total current asset, which is this year, or actually I think it was 2019. So it was December. Yeah, so you can see their total current asset from December 2019, which is about the same. It's not a big difference from then and now. So it's kind of like Uh, that's they show you their balance sheet at the end of every year. So you got to just wait for the 2021, which will probably be pretty terrible because of what's going on with the whole economy and stuff. So you can see that their current asset, total current asset, is actually decreasing every year for Geo Group, right? Things I wish I knew before, but it's still a good it's still a good company to me. Their stock just does well. I don't know why. Uh, so you can see their total asset, which is their total asset is actually increasing. You can also see their just their total current liabilities as well. And if you try to see, so they have more total current asset than they do have total current liabilities. So which is great. We'll talk about all this later. So that's how I do to inference whether or not I want to get into a company based on their dividends. So Geo Group is a nice one. Let's look at something like Comcast, right? Comcast, I like. So I'm on their balance sheet, but let's go to stats, right? Balance sheet says in financials, the payout ratio for the dividends is in stats, right? So actually, let's go to summary first before, and so you can just see the summary of the stock. You can see the earnings per share, which is 2.83, which is pretty good actually. I like that. It's not bad. So it's pretty decent. So let me see. So yeah, you can see how much they pay you 2.43 percent in dividend yield, right? Per year, right? So you can see how much their yeah, so you can see how much they pay you per year, which is 92 cents basically. So you can see you can see that, and you can see their dividend yield, right? The dividend yield is what's in the parentheses with the percentage, and that's the year. How I told you how they do the calculation for that, and you can see basically the their yearly payment that they have to pay their shareholders. So they're paying their shareholders in a year 92 cents, okay, which is in the highs, but it's still better than nothing, so that that and 2.43% is actually really good to me, just because it's not too high. It's something that I know that they can keep making. So when you're looking at dividends, you want a company that can keep making those payments, right? Not a company that has a super high yield that will and if it's in a bad economy, that they will obviously have to stop paying their dividends because it's too much for them to handle, and they're using more revenue that they would like to pay people out. So we got to look at a company with a smaller dividend yield, not too high, and just then you want to go to stats, right? And after that, go to the bottom and look at their. I already skipped it. I think I skipped it, and look at their. Okay, here it is. Their payout ratio, right? So their payout ratio is 29.68%, which is definitely under 100. So they're not using all their revenue to pay people out and for their dividends. Okay, so this company is very sustainable and will be paying their dividends for years to come, right? It's definitely I was definitely looking into Comcast as well, just because everybody uses Comcast for their Wi-Fi, for their homes and stuff, and I'm definitely looking into it. I probably will end up purchasing Comcast just because they seem like a very solid company in what they do as well. So as you can see, that's how I decide. So if you want to take that into consideration, that would help for you guys too. You don't want to purchase a stock that has their dividend yield is 30%, and it's like some kind of $16-15 stock. Like, that doesn't add up. Like, they're using basically all of their more than all of the revenue to pay people in dividends, and they're gonna stop paying that because you can tell that that company is not gonna be able to sustain that for long, right? So we're gonna jump. We're gonna jump into my Robinhood, and I'm just gonna show you guys where you can see that your dividend yield, the percentage on Robinhood, and I'm just jumping to my Fidelity as well, and you guys will be able to see where they the payout too as well. All right, so. All right, guys. So I am back in my Robinhood, and this is Geo Group that I own, right? So we just looked at the stats, and we're looking at their financials on Yahoo Finance for their dividend, which a dividend again is what? A dividend is basically what a company pays you for owning a share. Okay, So, which is great, which is awesome. So if you do your math and you feel like this company is going to do good to years to come, you can invest a lot of your money into. I wouldn't say suggest that, but after a while, you will be receiving dividend payments, and it'll be very if you're purchasing consistent stocks, purchasing good ones with just great growth potential and just sustainable, and you definitely enjoy that. Okay, so right now we're looking at Geo Group, okay, which their dividend yield is 14.91%. So it's actually getting a little smaller because they can't keep paying that 15% that we saw on Yahoo Finances. Yahoo Finance is a little outdated, I believe. So you're seeing that it's getting smaller because they kind of chucking it down a little bit because they can't sustain that high dividend yield, I believe, for this year. So if you go down, you can see how much they've actually paid me. So this is Geo Group. There, you can see their history. You'll be able to see. Robinhood would tell you when they're going to pay you a dividend, and you'll be able to see that. So I got mine for owning 2 shares of it, February 21st. So that was 96 cents. And it was 48 cents per share. So that's really awesome, really great. Right now, I actually own more than 2 shares, I believe. Oh no, I still own two. I need to own more. Definitely, I like it. So that's where you find your dividend yield at. Uh, so yeah, that's definitely nice. You can see that right here and everything. So let's get out of here. I think that's everything I want to show you guys here, and we can actually go to Fidelity, which I believe will show you exactly how much you're getting paid per owning a share before their payout date. Because Robinhood likes to do things a little slower, different. I want to see exactly how much they are paying me immediately when I look at a company, not when I own it. So that's why. I don't really pertain to. I like Robinhood, but they can do a little better. All right, so we're gonna jump into my Fidelity. All right, so we're in my Fidelity, right? And here with you guys, we're in the watch list again. We're not at my actual stock portfolio yet. I'll show you guys that very soon. But let's look at let's look at AT&T, one that I own, right? So we'll discuss AT&T very soon, not in this video, but coming up, because I do want to do a video with AT&T discussing their stock and another one, in my opinion. So here when you're on Fidelity and you type in AT&T at the top and you look at their stock portfolio, pretty much you can see everything. You can see their lows, their highs. You can see. So here it is, their dividend rate. Okay, 52 cents. I got paid that recently, and it shocked me. I was like, "Whoa, AT&T is something." So, so I had to buy another one, because I'm getting paid $1 every 3 months for owning a share. You know what I'm saying? Every 3-4 months for owning a share, basically at that point. So just think about that. You can do the math and see how much you need to make $10 per month. Not per month, but every three, because they have companies do have different payout times. They might do it, like I did say, they might do it every 3 months, right? So they might pay you every 3 months, right? Or they might pay you every 6 months, or they might pay you every month. They might pay you some, it just depends on the company. You gotta do your own research for that. So yeah, so as you can see, it's 52 cents, and I just like Fidelity because they show you right here. You see their dividend rate, 52 cents, like off top. Like you don't even have to own it yet until you can see that they already show you, which is awesome. And if you guys want to look, we can look at uh, Comcast as well and see what they have going on. Here we go. And we can see how much they pay. So their rate is 23 cents per share, right? See that right here. So easy, boom. You want to make your choice. We did talk about Comcast and their payout ratio, which is less than 100. So they're very sustainable in their dividends, so they will last a while. Okay, so I think we all got what a dividend is at this point, and how you can check up. If you want to invest into that company and just see, and just not solely go based upon their dividend yield. Just because they have a high percentage doesn't mean that company is sustainable or they're paying you more. Okay, so you want to look at their payout ratio, like I told you, in stats, and you want to look at that company as a whole too to make your decision, because solely it's up to you what you want to invest into. Don't fall into the dividend trap of just investing into company that pays you dividends. You want to invest into good companies, and if they pay you dividends, and that's even better, you know. So look at good companies, and if you and even if you want to solely invest into dividends, look at what I showed you, and it'll help you make a better decision. I'm telling you, it'll be a lot smoother ride for you, especially when a company does stop paying their dividends, because that does happen, especially in times of economic hardship. Okay, so that's everything I want to discuss to you guys about right now. Thank you guys for tuning in, and we'll talk. I'll see you guys next video. You guys like, comment, and subscribe. Thank you guys so much, and you guys have a nice day. Thank you.